Good morning. We've been talking this week about concentrated positions, and you could have a concentrated position in some sort of asset or investment because you invested early and it's grown in value. That could be Bitcoin, that could be ETH, that could be some company like Nvidia or Tesla or something you invested in very early. It could be because a company you work for or a company that you founded went public, launched a token, you have a significant amount of wealth built up in that particular asset. And we talked a little bit about diversification and risk. Now, I want to caution, because some people hear things like diversification and think you're going to go to a financial advisor and they're going to tell you you have to sell 85% of your Bitcoin or ETH or 80% of your Nvidia or something to diversify. But that's not necessarily the case. It has to match who you are. It has to match your investment thesis. It has to match your family needs and goals. So when we talk about those concentrated positions, we think through what are the risks to you and your family and to your wealth. And if it's an asset that you really want to hold, that you feel strongly about, and you're making plenty of money to live your life, and you're comfortable with the assets, then it's more a matter of, okay, where are the risks? If it's Bitcoin or ETH, do you have custody risks? Do you have risks that it could literally go to zero because you get hacked or exploited? If it's a certain stock, what is the risk? What are the things that can send that stock down in value? And therefore, how do we potentially hedge against that? If you need income, but you don't want to sell the asset, maybe it's down in value, then maybe we figure out how we can generate some sort of income or yield from that asset. If you have a significant amount enough, maybe you can write covered calls against it. Maybe there's some other way to earn against these concentrated positions you have. But it's a matter of understanding these particular assets that you own, your family, your particular financial situation, what you need. If you're struggling to make ends meet, but you have $5 million in some particular asset, maybe you need to sell a little bit of it into some cash. Maybe you need to get into something that's going to generate the income for you so that you can wait for the value to go back up, so that you can wait for your investment thesis to take hold. Maybe it's you need to wait for certain tax events. Maybe you need to wait for long-term capital gains to take effect. Maybe you don't have the cash to pay the taxes right now. We have to figure that out. But it's not necessarily diversification in terms of you have to sell most of this and get into a totally diversified S&P ETF. Maybe it's just that you need to think through the diversification of where you make money, where your wealth is, what you need your money to do for you.